తెలుగు క్రిప్టో యూనివర్స్కు స్వాగతం. మీరు మా ఛానల్ని మొదటిసారి చూస్తున్నట్లయితే సబ్స్క్రైబ్ చేయడం మాత్రం మర్చిపోవద్దు. మా న్యూ వీడియోస్ నుంచి నోటిఫికేషన్స్ కావాలంటే బెల్ ఐకాన్ ప్రెస్ చేయండి. ఇంకా చాలామంది మన సబ్స్క్రైబ్ చేసుకోకుండానే చూస్తున్నారు. ప్లీజ్ సబ్స్క్రైబ్ చేయండి. మాకు చాలా మోటివేషన్గా ఉంటుంది.
We are in a recession. The durable goods orders we just saw, really we're seeing the strength there because of activity being attracted to the U.S., a flight to safety. That's why our dollar's been going up as well. Nonetheless, we think we are in a recession. We're seeing tremendous demand destruction. You see demand for gasoline over the summer down to 25-year lows, 1997. Think about that. So lots of demand destruction. And we believe it will continue. The good news here is to hear Michael Evans this morning talking about, hey, we're all on the same page. This could be done in the first 3 months of next year. Well, if the market is the discounting mechanism that it should be, then it should be discounting the peak in interest rates. Yes, inflation peaked. We believe core inflation peaked at 5.3%. This is the PCE deflator that the Fed supposedly pays the most attention to, 5.3 in February. It's down to 4.6. And with all of the price declines that we are seeing out there, whether it's in retail because of too much inventory or way up the pipeline with commodities really falling out of bed, all of them, we think the inflation rate is going to be surprisingly low. We would not be surprised to see deflation month to month sequentially for a number of months during the next 6 months. I think they do not appreciate how much demand destruction has taken place out there. But this holiday season, I think, will be telltale that way. And so I do think we're looking at a major pivot. If we're right that deflation, and we've been saying this for a while, so consider the source, but if we're right that deflation, both for cyclical reasons and for secular reasons, all we do is look at technology and the cost declines associated with different technologies, and they're massive. So we think that inflation during the years ahead is going to surprise significantly on the low side of expectations. Well, I think they have been basing their outlook and their policy on two lagging indicators. Seems they've been paying more attention to the CPI year over year, which is still at over 8%, and employment. Both of those are lagging indicators. The leading indicators, which are all in the pipeline, easy to see right now, are all saying that prices are going to come down. Inflation certainly will come down, but I think the big surprise out there is the number of months we will see actual deflation, negative prices. And it's not just because of the U.S. In fact, we're benefiting from the flight to safety from the rest of the world. What's going on in China is highly deflationary. What's going on in Europe, the same. This energy is a huge tax on that continent. One of the other things that's happened in the last week that I think is fascinating is that both Japan and China have basically supported their currency. They're basically saying no mas. And in order to do that, what are they doing? They're selling dollars and buying their own currency. So effectively, China and Japan are doing some of the easing that we think the Fed will do, increasing dollars in the system.
So, Kathy, what turns things? Right now, the conventional wisdom, you're already saying we're in a recession. The conventional wisdom or prevailing view is that we're headed into a recession if we're not in one right now, and it gets worse, not better. You're saying that there's going to be a churn, and I'm trying to understand what is that pivot point, the inflection point that moves things in that direction.
Sure. We think employment is going to come down and the unemployment rate up. The Fed thinks so as well. That's a lagging indicator, a big lagging indicator. And we do believe that CPI-based inflation, especially because of energy, food's sticky, no question about it, but energy prices are coming down against all expectations. I would also say, there's so much bearishness in the market. Today, we see Goldman Sachs and BlackRock saying, sell equities. Oh my goodness. This is like, I remember, this was very early in my career, 1982, Business Week magazine on the front cover saying, equities are dead. And now you have some of the biggest houses out there who would tend to benefit from a positive equity market saying, equities, don't go there. We think that the surprises, again, both inflation and interest rates are going to be significant to the downside. And we do think, even though we are in a recession, that it won't be as extensive. It's going to be much more of an inventory recession as we get interest rates and inflation down. Well, for us to be even ahead of the S&P after such a trashing during the last year, you're certainly looking at endpoint sensitivity here. I guess it doesn't surprise me, but what it says is if you look out from here, if we're right, we're going to take off from that 83%. And we believe much faster than the S&P 500 is for two reasons. One, we're focused on the right side of change, innovation, disruptive innovation. And two, the traditional benchmarks are very backwards looking. And so what is disruptive innovation going to do? It's going to disrupt them. So I would expect the gap to widen significantly from here. Well, I think one of the reasons that innovation broadly has been hurt significantly in the market is the inflation and interest rate environment. If we're right, and inflation and interest rates are peaking, are in the process of peaking, inflation surely. Interest rates, the Fed seems to want to go again. But if we can see the end of all of this, as perhaps economic activity weakens and what's happening in China and Europe impacts the U.S. as well, I think that the market will be looking at low impact rates. I think that's key. And as I mentioned before, we think that it's going to happen. And one other thing, in terms of access, on the Titan app, investors will be able to gain access to public, but especially private companies for a minimum of only $500, as opposed to millions and millions it might take to access these sorts of companies in the traditional venture capital space. We've been buying Roku, and you can see that because we disclose our holdings every day. I think our last move on Tesla was a buy. As you know, we trade around it, and it actually has held up a lot better than most of our other names because it is in the broad-based indices now. So we have used Tesla to trade around, but it is our top holding still, and our confidence couldn't be higher as we see the movement towards electric vehicles accelerate. We're pretty excited about the next 5 years. I think this year there will be almost 8 million EVs. I think this year there will be 60 million in 5 years, and we think Tesla's in the driver's seat.
Please like, share and subscribe Telugu Crypto Universe.